Hey everyone, and welcome back to another Tesla weekly video for today. So in today's video, we'll keep it quite short. Some numbers out of China, out of Europe. I want to talk about the Tesla Uber news that came out, Tesla India, and I'll touch a little bit on Rivian as well towards the end of the video. So if you're interested in all of that, hit all the buttons. Would really appreciate that. If you want to support me even further, to check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Tesla's underperformance this year continues. It's down already 16.35%. But it's important not to forget that in the past 6 months, Tesla stock is up still over 52%. And in the last 3 months, we're now down to flat-ish. The company is still worth just over $8 trillion. And then, of course, if you look at forward PE, yes, it's still very, very expensive. It's over 100 times. And at the time of making this video, if you look at the average analyst price target, it's actually sitting quite close to the price we're at today at, well, just over 1.4% higher than the price we're at right now. And so as always, we'll start off with the Tesla weekly insured number. So that number came in at 7,500. Of course, year over year, great performance, but don't forget that last year, same period, Chinese New Year. So far in Q1, we're at 50,400, but don't forget that also this year we have the impact of a refresh Model Y. And for those that are new here, this is available for channel members. And if you don't want to become a member, that's fine as well. You'll just have to wait for the weekly videos to get this for free. Now, looking at the mix between Model Y and Model 3 sales in China, of course, you can see the huge impact of, well, a refresh happening. Whether it's last year for the Model 3, although the Model 3 was not really that much volume compared to what a Model Y is selling in China. So right now what you're seeing here is a huge impact of the Model Y being refreshed. And I would not be surprised if we're going to see an even bigger impact next week. But what's very positive is that, well, production is already off to a good start for the new refreshed Model Y in China. Of course, that launch is now expected to be in the next 10 days or so. So keep an eye out on that. I do think that there is going to be quite a spike in those Tesla weekly insured number starting in March. Moving to some European countries, Norway, Netherlands, Sweden, UK, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland, the number came in at 2,200, up a little bit week over week. Here as well, of course, we have that Model Y refresh plus some weakness in Europe for the overall EV market. So that definitely impacts those numbers. And yes, if you want, yes, there might be a political impact as well, for sure. Let's put that in. And so right now, year-to-date sales are minus 23.4% compared to the same period last year. Switching to some good news, and that's, well, Tesla India. We've talked about Tesla India in the past. Of course, last year they had to meet, didn't meet, there was delays, etc., etc. So apparently now India considers reducing import tax on EVs from 110% to 15% under a new policy, which of course would be beneficial for a company like Tesla if, of course, Tesla wants to launch in India. And it does seem like they do. If you look at the job listings here, there are already a couple of openings with regards to positions in India. Now, can India support EVs? I don't know. Maybe they'll have to build out more infrastructure. I would have thought that they would have started a Megapack factory in India first and then start to ramp up the Tesla vehicle sales there. But okay, we'll see. We'll see. I think India is the number 3 or number 4 in car sizes, car market sizes in the world. It's China, US, then either Japan or India. It's pretty close between them. So yeah, this will open up the door to, well, maybe this is the increase in volume that we are looking for starting already in 2025. That's going to be quite interesting. But I also think that India, from an infrastructure standpoint, I think a Megapack factory in India is in my opinion, quite a good idea, because we did hear from Elon on the last earnings call that they have a third location, and actually we didn't get much details after that, so quite strange. Then, of course, there are no weeks that go by without another story about Uber or Tesla, autonomous driving, autonomous vehicles, Waymo, etc., etc. So this time we had the CEO of Uber talk at a conference, and he said that Elon Musk wants to go alone on Tesla robotaxi rollout. Uber Waymo will compete with Tesla robotaxis in Austin. He said that at a conference in Miami. Now, of course, you have the Tesla maxis already saying, oh, but of course, why would Elon say that he wants to list a fleet on Uber? Uber is done, Tesla is going to destroy Uber, etc., etc. Now, as you know, or might not know, I own Tesla, I own Uber, I own Google Alphabet as well, so I own Waymo. Now, I don't think that Uber will be destroyed. I also think that a couple of years from now, you're going to have Tesla robotaxis on the Uber platform. Also, for the Tesla Maxis, which in my eyes, if you're a Tesla Maxi or a Tesla Q, you are, well, a bit of the same. Because if you believe that the only way for Tesla's robotaxi network to be successful is for Uber to fail, then either your thesis about the long-term future of the robotaxi is not as solid as you think, or you think that Uber is actually a threat. I don't think so. I'll give you an example. It might not be apples to apples, but it's pretty close. If you own a website and you sell a particular product on your website, do you want your product to be on Amazon's website as well or not? I think you would like it, no? Because you want the traffic. And with increased traffic, you get probably more sales, right? Okay, it's true that there are fees on the Amazon platform. But if that can drive you, I don't know, 2x, 3x, maybe 5x more traffic, more sales, why not do it, right? Why not list on Amazon and on your website? It just makes more sense to me. Same thing here with Uber. Why not list on Uber? Uber already has millions and millions of users, millions and millions of riders on its platform. Why not list on it? Are you afraid that your app, your standalone app, will not work? Are you afraid that people will not download your standalone app? To me, it just doesn't make any sense. It doesn't make any sense for Tesla not to list cars on the Uber platform. Don't you want more people in your cars, right? You as a fleet owner, what do you want? Your number one goal is to make sure that utilization rate is as high as possible. By not listing it on the number one rideshare platform, you are missing the point here. You are missing a huge opportunity. And I also think that this is not going to be a winner take it all. I think there are going to be multiple winners. I know Tesla Maxis will tell you, oh, who's Tesla competing with? Well, whether you like it or not, Waymos exist today. Thousands and thousands of people use Waymo each and every week. And Waymo, you do not have to be in the driving seat. Now, you're going to say, yeah, but it's geofence. Who cares, right? As a rider, you don't care if it's geofence. You don't care. You only care that it takes you from point A to point B at a reasonable price. Right now, it's true that Waymo is more expensive because there is no scale. But again, if you're looking at a profitability metric, utilization, unit economics has to be the top priority. By having a standalone app and not an app like Uber, which exposes you to millions and millions of riders, you are going to get hurt. So we'll see. I put my money where my mouth is, and which is why I opened a position in Uber when it was in the 60s. And that's why that position has risen in the public portfolio. I think I'll be proven right. And I think the market, if it gives me more opportunities to buy, I'll just buy more. I think at the end of the day, Uber will still exist. It's a very profitable company at the moment, will become even more profitable in the future. We'll see what Tesla wants to do. Also, Uber has a marketing know-how. Marketing is a banned thing at Tesla at the moment, right? We cannot advertise because, God forbid, we spend 1% of revenue on advertising and making sure that, well, people are educated about EVs. Nah, that's too much to ask, right? Anyways, continuing here, going to Rivian. So Rivian reported earnings and they reported their first gross profit quarter. So they achieved Q4 2024 gross profit of $170 million. Now, it's also important to note that total revenue from the sale of regulatory credits were $299 million for the quarter and $325 million for the fiscal year 2024. So no, they did not make a profit on each vehicle that they sold, which is probably also why the stock went down and not up. It also has to do with guidance for the full year. Now, they did also close a joint venture with Volkswagen and a loan from the Department of Energy, which provided up to $10 billion of incremental capital. I think that's one of the ways that Rivian just keeps on existing. Of course, R2, R3, that ramp up in 2026, especially for R2, is going to be extremely important. They also said the following with regards to software and services. We expect software and services to be north of $1 billion, and consistent with what you saw from us with the 28% gross margin in Q4 from software and services, we anticipate being able to achieve a gross profit margin in the 30% area for the software and services side of the business. So yeah, that's going to be an interesting one. Of course, that's also thanks to that Volkswagen agreement. And then when it comes to the R2, they said the following. The recent transition of our second generation R1 vehicle has dramatically improved our cost structure while also incorporating new technologies which will serve as the foundation for our mid-size platform, including our zonal network architecture, in-house software stack, and Rivian autonomy platform, positioning R2 for a robust launch in the first half of 2026, which means a year from now, R2 should be launching, and maybe that will be the turning point for this company. I know some people are bullish on Rivian, and to be honest, I hope they are successful. I actually like these vehicles. I like what they are doing, so I'm rooting for them. I don't have a position. I've seen some options for 2026, January 2026 or January 2027. That could be interesting. It could be an interesting play. Right now, for me, it's not interesting, but if you want, I think maybe Leaps could be a good option, no pun intended. Then, as for the 2025 outlook, so they said the following: vehicle delivered between 46,000 to 51,000. And this is basically the issue, right? 46,000 to 51,000, which means basically no growth. It basically means no growth year over year, which would mean already the third year in a row, which, okay, you say, yeah, but that's because in 2026, first half, they're launching R2. Okay, fine. But what about R1, right? Is R1 already forgotten? It's quite an issue. But maybe they'll surprise us. Maybe they are putting the bar quite low. They also said that, demand for EVs right now, it's true that it's struggling. So it's not just Tesla, but apparently a loved brand like Rivian is also suffering from a lack of demand, I would say. So yeah, we'll see what happens. I truly hope that they are successful because we need more of these players out there. Plus, I think the cars are quite cool, quite nice. So we'll see what happens. If you own a Rivian or if you own Rivian shares, let me know down in the comment section below and tell me what you think about the outlook for 2025. And now touching back on the Tesla, we can see that, of course, we continue to go down. We continue to make our way towards that 200-day moving average, which, of course, sits at $300, $301. That's when maybe things will start to get a little bit more interesting. That was previously here a local top back in July 2022. Maybe could be a nice rebound area or a support area over that 200-day moving average. RSI, of course, is trending down, so there is definitely some negative momentum here. Remains to be seen. So far, I'm not adding more to my position in Tesla, whether it's in the core portfolio or in the public one. If we do get closer to 300, I think that's when things get a little bit more interesting right now. But yeah, the stock did run up quite a lot, right, since the election. So I'm not surprised that we're seeing this. Plus, it's not only Tesla. We've seen that with the other Magnificent 7 as well. It's truly right now at the start of 2025. It does seem like my contrarian trade is playing out quite well. So that will be it for this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.